Selling into market strength, dialing back to 50% net exposure, and looking at call options for extra income. Gary Glover from Novus Capital, that sounds like a good place to be with the portfolio. What's the overarching timing and events that are driving you to free up a bit of cash at this cycle?
Yeah, look, I just look at a couple of things. Obviously, the midterm years sort of cycle and also the 60-year cycle are a few things that we're looking at. So the 60-year in particular is the one that market's been tracking quite really closely to. And also just studying of the midterm years as well, how we sort of fall into lows, how we bounce, cover. So I think we sort of said last week, Chris, that really thought this market needed to go a little bit higher just because...
suck the rest of the market in.
Yeah, just sort of told me, because obviously people would be, people are expecting, people view this as a bear market rally. So no, don't get involved and just looking for maybe a 10% move. So it's going to be obviously bigger than that now. So some of those bear market rallies can be bigger, can be short and sharp stuff there. So really kind of draw people in here. And, so fear of missing out, coming in late. So this kind of needs to sort of, I still thought last week people were still sitting on the fence a bit. But now people will start to get scared here now that particularly funds, that haven't participated and they've been waiting here, they're under, so we're almost going to get drawn in here at the wrong time here. So that's what we want to see. So starting to see a few traders and stuff that I know sort of getting coming in here, starting to build positions, starting to get involved here. So that's what we want to see here. So I've got a bit of timing actually for around this weekend actually, which is sort of my my preferred timing for just in terms of how they've previously maneuvered in what we call midterm years. So there's two sort of setups there. The one that's most common, we're sort of setting up here. So so this around this weekend here, so sort of Friday, Monday, possibly could last to the end of next week. That's the only other small one there, but around sort of Friday, Monday would be pretty interesting. 19th
or 22nd.
Yeah, just the sort of date to watch and see where we're at around there. So look, you sort of got to get a, it's funny. I mean, it's just obviously the thing about historically when inflation has peaked. So it's not basically when inflation has gone down. It's basically the peak of inflation. That's usually when equity markets do rally. So that's what we've sort of seen here. But I'm still not sure if inflation has peaked, so, or it probably has peaked, but if it stays elevated, then that's probably not great either. So we probably need to see inflation keep receding. So I think you need to sort of see the inflationary numbers keep getting lower and lower and lower, and that'll be what you want to see. If we sort of see them stabilize out or even pop up a little bit, that'll cause a little nerves in the market there. So I think you're starting to see a bit of a top in there. So that does, that sort of gives credence to this sort of rally being a bit more stronger than I think. So I think we mentioned, in the last month here that the actual the volume in this rally has actually been pretty robust. So more so than the previous two rallies. They were really light volume the last two rallies. So no conviction at all in those. But this one's actually got some conviction. So drawing people in. So for me now, sort of always thought October was going to be the low for US equities, and I thought it was going to come back and retest that old high. But I think this rally here probably puts that in a little bit of doubt now. So possibly, the 60-year cycle actually made a higher low, so it didn't actually come all the way down. So that's the other possibility here. The strength in this move here maybe means that we might just after this sort of rally here, we might cool off a bit, ingest, maybe make a higher low in October and then go here. But with interesting phase here, sort of a few levels. I think that 50% level on the NASDAQ probably was one to keep an eye on there. I don't know if we can get to the 61.8, but look, let's say it's been pretty strong so far. So who knows? Could pop up there. But just sort of approaching some sort of key times here for me. Just the fact that we've gone up really aggressively up into that sort of time window. Is really super interesting, and there's plenty of volatility around too. Like we've seen, some of the stocks are really, car sales is up big yesterday. It's opened this morning after a cracking result, and it was down like 90, and now it's only down 27. And we've seen like 360, which we had was up and down the points bet was really up aggressively. Then it had a couple of days relief, big down, and then it's gone straight back up again. You're seeing quite a bit of movement in the stocks here. So it's yeah, I don't know. It's just seen a bit of vol, in there. So yeah, sort of interesting here. So this is sort of not typical sort of early market behavior. So yeah, but I guess we'll just see what happens in the next week. I'm just sort of mindful that we're sort of running into a bit of a ideal sort of market timing here. So for me, it's sort of oftentimes I'm not sort of price is sort of secondary. If we've got a really strong time cycle there with some history, I've got to respect that. So that we are running into that here this weekend here. So we'll see how we trade up into sort of Friday, Monday next week. But I think if you get any weekly reversal here in the next sort of fortnight, we've got to respect that.
I did note in your report you talked about that on the Dow, which when the chart comes up, we might just talk a bit more about the reversal. The S&P 500, this is a little bit different in the sense that when we look at the NASDAQ, you've noted that it's popped out of the channel.
Yeah.
The S&P 500 is still within that channel. So does that change for how you look at the S&P?
Oh, look, it's just sort of different. Yeah, I mean, it's funny because I sort of in the because I thought this is sort of a bit like I know we've had a growth crunch there, and we used the sort of similarities of the sort of 2000, 2002. So there's a lot of similarities all the way through there. But the rally in the NASDAQ has been a lot more like in that previous cycle, the Dow was the strongest indice. I think S&P was the next strongest, and the weakest was the NASDAQ. So that bounce actually in the NASDAQ is actually, that's pretty strong compared to what happened in 2000, 2002. So there was a lot of dead cat bounces in that 2000, 2002 contraction there. So that rally is a little strong. It's a little, looks a little different than that same period there. So that's the only sort of difference I sort of see there. But yeah, I think, yeah, we just, I guess we'll watch that upper trend line there, just sort of something to sort of watch out for.
That's also coming up with that same cycle, isn't it? Because it's the overarching markets. It's not just for the NASDAQ.
I say I'm kind of less worried about price here. I'm more worried about the timing here. But the timing has just been spot on here this year. Just the cycles and stuff I've followed a classic sort of cycles here. So yeah, the only thing worrying me a little bit is that everyone's been pretty bearish. So we're now
give it a bit more legs.
Yeah, so now starting to get a few turning here. So probably need a few more to turn, this week as well. Get people involved, and then maybe catch them out a little bit. So, but yeah, the only thing that worries me a little bit is I think Larry Williams put out a cycle there. Maybe I think we might have mentioned it 3 or 4 months ago about how equities markets sort of tend to peak as inflation. So equity markets find a low as inflation peaks. So it's not actually, we don't need to see inflation go down. We just need to see inflation peaking, and that's usually the low in equity markets. So if we have seen that, which is a good chance here we've seen that, so evidence is already suggesting it started. But
well, that's what everyone was looking for last week, wasn't it?
Yeah, but it's a good call by Larry, because that's really, most people think you're going to see inflation turn down and get a few months of it turning down. History says no, we just need to see the peak, and once it turns down, and that's usually when market's low, but it has to continue down as well here. So so that inflation will need to sort of keep reciting. So if you see energy prices sort of pop up here, or inflationary pressures start to push back up again, because obviously wages have moved up. That's the one thing that has sort of gone up. But yeah, I mean, it's hard to say here. An 8.5 print is still pretty high, and rates are still pretty low. So if you look at some of there's a few charts being posted there. I know sort of Stanley Druckenmiller is talking about rates as well, how that the only time, if the Fed doesn't get in front of the inflation, get the Fed rate above it, it's never come down quickly. So that's a little bit of a worry, because we're so far behind at the moment. And if you look at the historical, there's some old sort of charts I've been floating around about the Fed rate and the inflation rate. And normally sort of the Fed has to get in front of the inflation to sort of get the inflation curve down. And that's something in the past which has always had to have happened, and it's not happening this time. So are we going to do something? You know, are we going to be able to get inflation down without getting above it, which is something that hasn't happened before? That's the big question. So,
There's a first time for everything, but as you said,
there is, but these
probabilities.
I never like, the odds against you, so that's not a good, yeah. So there's a couple of good Stanley Druckenmiller videos going around. I think he was out this week, and then I think he was out sort of a month ago. Worth watching that. There's a few charts there on the Fed rate and the inflation rate going back to like the last 100 years. That's a good chart to have a look at as well. It's just, it's like, oh, okay, still a little bit of risk here, so yeah. But we digress. We better move on, Chris.
Yeah.
Yeah.
Well, let's have a look at the Aussie, because that's a little bit different. We've got coming up to that recent low. So over the last couple of weeks, you've marked this point. So if you look at that sort of third high, and then it comes down to a low, the closed low before that rallied for 3 weeks. What that point that we're coming to now, is that sort of becoming more and more critical because we've had a really small week? How does that read?
Yeah, so I think we've had a few touches there. Actually, had probably 2 or 3 touches there this week, actually, around that 7075 level there. So I haven't been able to crack it until today. So it was just a bit of a level I thought might catch resistance there. And also just sort of coming into this week as well, there's a bit of timing, for me this week as well, just sort of something to keep an eye on. So yeah, but yeah, maybe we go back up and retest the previous. Maybe we go and make us, go and retest the previous high. So don't know. It's just a level I was sort of keeping an eye on, because that's the first swing low on the way down. It's oftentimes if you are going to be in a downtrend, that would be basically the market might come back down to and then hit resistance there and turn down. But yeah, good. We've actually popped above there this year, which is interesting there, because if you remember that 2002 period, which we talk about being similarities, when the NASDAQ and S&P were making lower highs, our market actually bounced back really aggressively into the range, and in a couple of instances, the S&P and the US market was making lower highs, we actually made new highs, which is, you look back and go, how the hell
How did that happen?
How did we, rally to make new highs? Well, the NASDAQ and the S&P were in this massive bearish phase, and it, obviously look back and go, okay, we're more of a value market, and we maybe commodities as well, but we're much stronger here. So yeah, we're pretty strong here so far. So pretty interesting. I don't know if I don't see us breaking the high. I can't see that. More likely that maybe we'll go back to 7,200 or something like that, So, but yeah, just a few levels there to watch. But yeah, I guess the end of this week is probably pretty important. Sort of next week. So yeah, I would definitely be. Yeah, look, I'm definitely looking to take money off the table here into this rally here. I'd like to get my model portfolio back to at least 50% in cash here, if this can push on here. So takes, I think I'm up 12% here in the first month and a half, which is that's a big return quick.
Yeah.
Normally, sometimes you can struggle to get that over the year. So it's a decent move pretty quick here. So just just gotta lock some of that in. Yeah.
Well, you mentioned the Dow, but you've mostly covered that in the sense that you're looking for any bearish reversals as be respected, and you kind of touched on that with the cycles and so on coming into this Monday period. If we move our way over to the trading shares and have a look, because you'd mentioned gold a few times, and in the last couple of months you'd said, look, we remember that coal was out of favor, and then look what that did. And then at that time, gold was coming out of favor. And we'll use the chart here to kind of highlight that time period. As you're looking for late June, July, is saying it's the dog of the market, but they each kind of have their day in the sun. How does Newcrest fit in with the portfolio and the trades that you may have tried to get, or the exposures you worked on with gold in this cycle?
Yes, I try to get a few in the portfolio. I've got a few other clients have bought a few Northern Star and Evolution and Regis as well. But the model portfolio I've sort of missed getting set on extra ones out. I've just got the Newcrest. So I've sort of got so far I'm in the stock which has been the laggard here, which is probably not great from the point of view that, like, Northern Star got away from me, but yeah, I mean, I still think gold looks pretty interesting. Some of those other stocks have really had a nice impulsive rally and some pretty good volume there, which is pretty positive. Newcrest has definitely been the laggard there, but we do have heightened volatility here, and also we do have heightened volumes here. So there is signs of accumulation taking place down here. Some really big volumes popping in there. We've sort of got a couple of higher lows as well here, sort of setting up here. So really just needs to sort of hold the swing low here. So maybe we might get one of those 0, 1, 2, 3 patterns there, Chris, where we get a.
They've been doing pretty well in the last.
So we might get a second or third high low. So it might take a little while to build here, but still think gold's kind of constructive. Just needs just needs to sort of hold here. So far, the down days are sort of pretty light volume, and up days are big volume. So but yeah, just seem to be, this one's been the lag out here so far. So everything else is looking in that sector looks pretty good. But Newcrest is probably the heavyweight. So but yeah, it's a bit of a lag out here, but still constructive here. I guess the beauty is there. I just that'd be, I just use the last swing low as my stop here. So pretty sort of pretty tight, good risk reward here, I think, at the moment, if you're sort of buying it with a as that last low as your stop there. I think it's interesting here. But there's a bit happening in that sector, so that makes it interesting. Like I said, Northern Star, Evolution, I think Regis, Silver Lake, De Greys. I mean, there's been a few stocks that have actually had some decent pops there. So Northern Star actually is the one that had some really decent volume through it. That looks pretty impressive. So yeah.
Well, if we move to another logo that we've seen many times on your videos over the last couple of months is Temple and Webster. So we bring that one on chart on screen here. Now this, we've talked about it a few times. You've mentioned sort of trading throughout this low period, but you've highlighted what looks to be like that sideways consolidation. Is that a flag with a bit of spacing from the last high, or what's?
Yeah, a little flag, a little triangle there. The main thing there is actually we've had an impulsive sort of pop, and we've had some pretty good volume in that pop. See the volume off the low there? We've had an exhaustion of that low, big volume, big sort of jump up day on good volume, and then a bit of a upward move, then a bit of a sideways shimmy. Then we saw some big volume come up again. That was really impressive. That volume there was really impulsive, those sort of few days up there. And then we sort of contracted in a bit of a sideways manner. And then, so yesterday was a little bit of a shakeout day. Actually went sort of slightly low. There's actually a bit of volume in there, positioning ahead of the report or maybe getting out. Everyone's, traders getting scared. But today it's popped up out of that range again. So on a pretty good result. But again, so it is kind of the nature of this market at the moment is these stocks are moving around a bit. There's some decent moves there, percentage moves. Probably because of liquidity. I don't know. It's it's had a bit of a pop here today. So does look quite good. But look, it probably goes for a run here. I wouldn't overstay stocks in this market. I just think if you get a nice pop and you run for 3 or 4 days and you run hard, I'd just be I personally think this is the market to be taking profits on there. Use your risk reward, position nice and tight. Bet small in this market here. I think you need to give yourself a bit more room than normal, just because the movements are pretty advanced. But the good thing is there that if you give yourself room, if you do get the right move, that things are moving pretty quickly here and pretty big. So so there's definitely you can definitely get those sort of decent sized moves to get returns there. So I think I've been stopped out twice this week, and that's probably I actually got a bit upset this week. It's like, gee, it's been a while since I've been stopped out and stuff. So
you've been hitting a lot of profit targets.
Everything's just been going bang, 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 and running and hitting it, and so it's like it's like, oh, that's all right. This is what it feels like to actually have a losing trade. But so initially getting annoyed or getting upset, but then that's a bad sign, because that means you just had a good run. It's not normal to be having such a good run like we've had. We've had a really decent move here, so it should start to get trickier towards the end. I know sort of Minervini always talked about, once he starts sort of having a few losses, that usually tells him the market's starting to change. So, it's been an interesting move here, but I think just got to be a little cautious here. Just so I would still few trading opportunities out there. So, but I'll probably just start to probably starting to decrease my bet size there, try and keep a bit, cash in store there, is what I'm thinking here.
Right. Well, that's a good way to look at Temple and Webster. On the other side of the coin, CPU, Computershare, has been really resilient in the sense that throughout this market cycle, 2022, it's really held up much higher than Temple and Webster, the chart we just had.
Yeah.
What's happened here? This is a big black candle, especially on this chart. So what's happened here?
Yeah. So that's a great observation, Chris, because that's exactly how I felt about it as well. I thought, wow, this thing's just been holding up here. It's been one of the strongest stocks here. It's hardly had any correction at all through the, bearish phase while everything else is having a correction there. But it does have those sort of 3 ascending trend lines, which always sort of worries me. It's sort of like you get these sort of blow off of vertical moves, and then they can come back to where that last trend line started there, which is around about that $18, $19 mark. The thing I saw in the chart a couple of weeks ago was that false break. So went to a new high and then sort of failed. And then we've seen a bit of volume on the downside here as well. So it's actually starting to sort of sell off here. So that's a little bit of a negative sign there. Sort of, so the false, going up to a new high and failing there. It's a bit of a first sign of sort of distribution taking place. And we saw some pretty heavy selling as well through there. So that's a bit of a negative sign there. So just starting to see a few stocks start to show this. So I noticed Coles was another one here that's popped up this week. Done something similar there. Just this one probably not as bullish, more of a bit of a sideways sort of pattern there, but just gone up in the last week or two here to retest the old high. So obviously Coles and all these Wesfarmers have been big beneficiaries through COVID there. That's obviously run into those 2020 highs. But since then, it's had a bit of a pullback, gone back to retest the high again. But going to a new high and failing up there, just a marginal new high, is a bit of a concern there. So just got to watch here. If we start to see some volume from selling come in here, that's one that looks a little negative there. So just seen a few stocks starting to show some early distribution signs. So if we are going to have a bit of a peak here in this sort of mid to late August, we should start to see a few stocks show distribution. So if we get a few more start to show this, then we should be a little bit concerned there. Hence why I'm advocating getting a bit more cash on board.
Might be like that Minervini aspect that you said. If you're starting to see sort of those selling and those large distributions coming in, hitting the stops, another indicator that the character of the market's changing.
Yeah, well, some of the setups and stuff are coming through. Like normally, most of the setups in the past have just sort of, once they've set up, they've just popped and gone and haven't looked back. They've sort of kept going. They've had a few little reliefs there, but getting a few more messier sort of turns here. Definitely starting to see some, like they're just starting to see, company reports and a great result and it's up big, and the next day, just for no reason, it's down. It's like whatever there. It's like, but then half an hour later, it's back up again, and so we're seeing quite a few stocks having those sort of big movements back and forth here. So it probably tells you there's a bit of, maybe a lack of liquidity in the system as well there, Chris. Sort of it's be able to push stocks around that manner. Sort of interesting there. So that's sort of, but again, this market's going to try and draw everyone back in here at the very worst time. So just keep that in mind. So, but that's my view. I could be wrong, but so far it's sort of it's gone the schedule so far. But I think by the end of this week here, I'm hoping to be back in at least 50% cash. That's my view.
Well, it's a good time to take the risk off the table, take the chips off, and crystallize some profits, as you said you've been doing for quite a while. Now, one that's been really hard and perplexed traders in the last couple of months is coal, because it's absolutely ran rings around the market since Ukraine, Russia invasion. That's really just polarized the coal market and pushed that up so high. But it was notably different to uranium and lithium that we've been talking about for the last couple of years, and how there was not as much participation in the retail group. There wasn't as much sort of hype in it, but the share price has definitely moved. And credit where credit's due, you did call a fair few months ago saying, look, it's an overbalance of, it might have been Terracom or one of them at the time, where you said this just doesn't look right. The coal ended up tumbling back down. Now, yesterday, Whitehaven coal hit another high. You've got the chart of CRN Coronado here. What's happening with this coal market, and why have you picked CRN as an example here?
Yeah, I just noticed this one has sort of cooled off quite a bit compared to the others. The others are sort of had their pullback and then bounced pretty much straight away, whereas Coronado sort of had its pullback and then didn't bounce, had a bit more of a congestion there. But when I look at it here, all it's done is sort of come back, sit on top of the previous high, and then last week we had a bit of a bounce off that sort of key low there. So pretty interesting price zone where it's come back to found support and then bounced again. So I mean, yeah, the coal issue just doesn't seem to want to go away. It does all this talk of lack of supply coming on board and lack of investment in that area. So yeah, it's funny. Obviously, if you look at those inflationary sort of periods, those charts and stuff there, obviously energy #1 sector throughout that the last inflationary period. So definitely been the #1 sector here so far. But you do get big moves up and down. So that's the only thing to be careful as a trader, is that you might have 100% returns one year and you might be down 30-40% the next year. So so it's okay to be following these, but you just need to manage your risk as well. So but yeah, it's just interesting here that Coronado sort of come back, set on top of that previous high and bounced here. So but yeah, looks interesting there. Maybe you'll get a little retreat back into the range here, but I'll be looking for this to sort of pull back a little bit, try and do a little flag type of thing, like a bit of a TPW. We just sort of showed something on, pull back on light volume, and then hopefully sort of continue on. But we just want to see a little bit of a breather there, light volume, like yeah, exactly. So we'll see what happens there. But that's definitely one to keep an eye on.
Now the last one here, PRN, this is broken up and over a downtrend line with good strong candles for 2 consecutive weeks. The volume doesn't seem to be as high as it was peaking sort of earlier in the year when it was trolling out this trough.
Yeah, good observation. Yeah, bingo. So yeah, I mean, it's sort of good volume in the last sort of low, so a bit of a 3-wave rally, but didn't really get motoring, got stuck underneath the previous swing low, and then it's turned down. But even though it's turned down there, it hasn't really been a impulsive move. It's really sort of struggled to go lower. So it's taken a long time to get down here and retest this low here. So it's gone marginally below that low. It's like a little bit of a false break again. And then started to turn up here. So good little signs there. Also breaking above that sort of trading channel as well. That's another positive sign. The third ingredient is not there, as you quite rightly sort of pointed out, Chris. No volume there. So normally, if I saw something like that, false break and a channel break, and if I saw volume, and then that would be be fantastic signal. Yeah. So we are missing the volume here. So look, maybe the volume can come in at some point. Maybe it's going to come in late here, but it does look interesting here. But yeah, just not showing the volume so far. So the thing about the volume sort of tells us that sometimes if we don't see the volume, we don't see big moves. We only see a small move. We really want to see some bigger volume there to get a bigger move. So, but definitely got to watch this one here because it has broken out here. But we just want to maybe wait for some congestion there. Maybe if we see some volume, pulse and volume come in, then we can follow it there. But yeah, it's a little bit underwhelming here so far, even though it is a bit of a bullish break.
That's a good chart analysis to break down. It's 2 great criteria, and some people would look for those setups. It's a downward channel breakout. That's phenomenal. Hey, look, it's also a false break. That's great. 2 ticks in the box. Let's get going. But as you noted, those two ticks don't mean much without the volume. So
yeah, no, exactly.
Well, that's a really good breakdown of the trade there. And for those who want to get in contact with you, trade more, then your contact details are on screen there. And then also later on in the week, we cover the 30-30 list where you break down more charts in greater analysis. And we'll put that link on the right-hand side of that playlist. And you've mentioned false breaks, which are a bit like springs. So there's that tutorial there on the right-hand side. Thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.